Hello and welcome to the weekly roundup, week ending Friday the 11th of June. Hope you continue to enjoy these weekly reports. Please do subscribe to receive our regular content. Any questions, drop them in the comments box below. Right, so general themes this week. Well, G7 in full swing down here in Cornwall. UK is under the international spotlight, and a great day for the FTSE, really to be outperforming its peers. In fact, the FTSE outperformed all major European peers, not just today, but across the week. The UK index is set to post gains of around 0.8% this week, third straight week of gains, albeit mild, but signs that the UK economy is gathering momentum, is certainly pushing it along. In fact, the UK economy grew 2.3% month on month in April, up from 2.1% in March. There's shops, hairdressers, outside hospitality, all reopening, and economic growth is expected to continue into May as more pandemic restrictions were eased. Sticking with the data, German industrial production unexpectedly fell as a supply bottleneck held back the recovery. So the German ZEW sentiment also unexpectedly fell. The DAX over in Germany underperformed this week, losing 0.6% as it continues to ease back from record highs reached in the previous week. And German industrial production unexpectedly fell, again on that supply bottleneck. Over in the US, US inflation remains the key focus. US CPI inflation actually came in higher than forecast at 5% in May, up from the 4.2% in April. However, unlike last month, the market didn't lose its nerve. There were enough one-off factors in the data for the market to believe the Fed that the spike in inflation is indeed transitory. This has calmed those inflationary fears that have stalked the markets now for weeks. And as a result, the US Treasury yields have fallen to 1.44%. That's around a 3-year low. High growth tech stocks, which are the most sensitive to interest rate expectations, have outperformed. So the tech heavy NASDAQ has gained 1.5%, while the S&P is set to gain 0.2%. And the Dow Jones actually declined 0.8%. Headlines from the G7 surrounding the global tax deal have so far been shrugged off by the markets, but there could well be more market moves coming as more news flows on this topic. So we shall watch with bated breath. I know a lot of people out there in the markets believe these global tech companies should be paying tax. So let's see if they can't make it happen. Over in the FX market, the US dollar has edged lower across the week despite the sky-high inflation print. US dollar index continues to raid around a 5-month low, finding support at 90. So euro against the dollar, the pair set for a flat finish amid a mixed batch of data from the Eurozone, dovish reassurances from the ECB, who left their policies unchanged, bond purchases elevated, but they did upwardly revise both growth and the inflation outlook. Pound against the dollar. Well, the pound is looking to gain 0.2% against the dollar this week as the pound cheered a fishing deal between the UK and the EU and a more optimistic than expected first meeting between Boris Johnson and President Biden as they continued to enjoy a stroll across the beaches here in Cornwall. Also as well, the Northern Ireland Brexit protocol still remaining a slight issue there. Over into the commodities market, oil up over 9% across the last 2 weeks, another 1% this week. Crude oil also hit $70 a barrel for the first time since 2018. This week, the EIA upwardly revised its demand forecasts for the US to 1.49 million barrels a day, up from the 1.39 previous. And the improving demand outlook not only in the US but also in Europe and the UK is really helping to underpin those oil prices. Gold is up 0.5% across the week, achieving most of those gains on Thursday after the US CPI inflationary print. Gold is considered a hedge against inflation, so the surging inflation has lifted gold prices. I mean, the fact that Treasury yields have also remained depressed despite rising inflation also just underpins the gold or the non-yielding gold. In the stocks, some notable movers. Ted Baker continues its downtrend after delaying the release of its results for a second time this week. Share price has slumped 3% on the announcement. Ted Baker trades down almost 20% since mid-May. British American Tobacco gained over 3% this week after upbeat earnings. The tobacco firm's also increased its sales growth forecasts after reporting a record number of new users for its vaping products. So you've seen 1.4 million customers were added in the last 3 months. Over in the US, big moves for the Clover Health. The so-called meme stocks are back in focus this week as retail traders are once again driving big swings. Clover Health seems to be the latest favourite of the social media traders, up 60% so far this week and up a massive 87% over 3 weeks, even though it had actually fallen 35% in the last 2 sessions. A lot of movement in some of the other meme stocks such as AMC and GameStop, also swinging wildly as well. So thank you very much for watching. Please remember to subscribe. Any questions, don't hesitate to ask, and have a great weekend. Thank you.